the project's day-to-day implementation and communication, stakeholder engagement and monitoring compliance. The steering committee has since approved a 3-year transition roadmap. The revised standard chart of accounts has also been approved, the IFMIS re-engineering project, and the public sector capacity building training plan. All these have been approved by the steering committee. The steering committee is supported by the following technical committees comprising the 5 work streams. IFMIS re-engineering work stream is in place, accounting, budgeting, procurement, and reporting business processed work streams, assets and liabilities management work stream, county government's work stream as a standalone work stream, and then we have the training, communication, stakeholder engagement, monitoring, and compliance work stream. So the National Treasury has a dedicated website, Transition to Accrual Accounting, under the Accountant General's Desk tab, where all support materials are available. So, Chairman and honorable members, the cash to accrual accounting transition roadmap and the standard chart of accounts can be accessed from the said dedicated website, together with capacity building and sensitization plans. Kenya has taken advantage of the transition exceptions provided for under International Public Sector Accounting Standards 33 and approved a 3-year transition roadmap accordingly. A summarized transition roadmap is as follows. The first year, which ended which reigned between 2023-2024 to 2023, which ended on 30th of June 2024. Here, audited International Public Sector Accounting Standards cash-based financial statements were to be made updated or available. Opening statements of financial position was ascertained. Now, from 2024-2025, which ended in June 30th, 2025, just less than 2 months ago, was the first transitional International Public Sector Accounting Standards accrual financial statements. Here, the balance sheet must have at a minimum financial assets and financial liabilities. So we, for the first year, capturing financial assets and financial liabilities as a minimum. Now, going to the next financial year where we are in, which is the second year of implementation of this system, that is 2025-2026, which will end on 30th of June next year. This will be the second transition transition and International Public Sector Accounting Standards accrual financial statements. Here, the balance sheet will have at a minimum financial assets, as was mentioned above, but also inventories and financial liabilities. So in addition to financial assets and liabilities, we will also have inventories forming part of the financial reporting. The final year, which will end on 30th June 2027, which is now the final year of implementation, here there will be full compliant with International Public Sector Accounting Standards of accrual financial statement that will include fixed assets, all financial assets, all financial liabilities, and all liabilities. So apart from the financial assets, the financial liabilities, and apart from inventories and other assets, there will also be fixed assets included in our financial reporting, and all the liabilities, including the long-term liabilities. So transitioning public entities are required to develop a detailed entity-level roadmap as per the above. So all entities are required to do a roadmap to transit to full accrual accounting by 2027 June based on this roadmap. Honorable members and chairman, I want to talk a little about IFMIS re-engineering. IFMIS has been assessed on what needs to be done for all public entities to report on an accrual basis. The National Treasury has already engaged a consultant to redesign IFMIS to ensure it is the one-stop shop for all government entities. This will include the integration of all other systems with IFMIS, which include payroll, pensions, EGP, e-citizen, and county government revenue systems. All will be integrated in the IFMIS. The consultant is already on site for the re-engineering, which is expected to go live on 1st July 2026. And Chairman, I just want to mention that these things are not happening at the same time. You will find some are a step ahead of the rest. Like integration of payroll is something that we are implementing this month. We are actually integrating our payroll system. We are also integrating pension system. It is already underway. Even EGP is underway. Now, on assets and liabilities, there are 17 categories of assets and 9 categories of liabilities that we want, and that will be seen in the revised chart of accounts. So key issues. Entities are required to maintain updated fixed asset registers in the IFMIS asset repository module. 2, boards of survey are mandated to validate assets by 30th June 2025, and it is expected that they have done that. All financial assets and liabilities must be recognized in the opening balances as at 1st July 2024, and that happened. An asset valuation framework has been developed and is undergoing public participation. You know, this is another challenge that we've had. Actually, to really get to know the value of assets, even the land that the government owns, it's guesswork a lot of the time. And if we have to value it, you have to spend so much money in doing the valuation. And this, with this system, will be cured. On training and sensitization, the steering committee has undertaken stakeholder mapping that includes all preparers of financial statements and users of the same. These include all national and county government entities. We are also dealing with oversight bodies, including internal and external auditors are being trained. PFM officers are also being trained. The national and county assemblies committees, including this committee, we are mapping out program on training and sensitization. So, during the year ending 30th June 2025, the National Treasury and the Public Sector Accounting Standards Board held several training sessions with preparers of financial statements, internal and external auditors, PFM officers, and accounting officers. All have been trained. And this financial year, the National Treasury will now hold sensitization training with all oversight bodies, including this committee. On communication, the steering committee has been providing regular updates and guidelines on the transition process through the following mediums of communication. Circulars, we have been issuing circulars, dedicated website, as I mentioned earlier, social media pages for quick updates. We can't do without social media anymore. It's the order of the day. Emails, posting of guidance materials through a dedicated website, and as I told you, in the desk of our Director General Accounting Services and Quality Assurance, print media also, and newsletter and publication. So, as I conclude, Chairman and Honorable Members, significant progress has been made in institutionalizing accrual accounting, including the establishment of governance frameworks, stakeholder training, and interim reporting mechanisms. However, of course, as is the challenge with all government programs, adequate funding is needed, compliance by implementing entities, and enhanced technical capacity remain critical to meeting the set timelines. So the National Treasury remains committed to achieving full compliance with the International Public Sector Accounting Standards accrual basis by 30th June 2027. Regular updates will be provided to this committee, and again, I want to repeat as I wind up that I am very confident that the steering committee would be willing to appear before you, led by the chairperson or the chairman, who is my PS in charge of National Treasury, to explain further the technical details around this system or migrating to this system. Thank you, Chairman, and that is my submission.
Thank you, CS. We were concerned that the Cabinet made a resolution on 7th of March 2024, and the steering committee was only gazetted on 20th of August 2024. And I think you have said that this was one of your first actions when you took office. I think there was a period where we were very, very concerned that a steering committee was not in place or a steering committee had not been gazetted, but we take note that it has been in office now for the last probably 1 year. Almost 1 year. In the next few months, we'll be considering reports from county governments prepared on accrual basis. As I said earlier, over the last 10 years, we have been used to the statements prepared on cash basis. Now, the Auditor General, if this is a transition that runs all the way to 30th of June 2027, are we going to expect a lot of adverse opinions or disclaimers in the first year? Because the issue of assets and liabilities has not been settled. It has been a long process, and CS, you might recall that at some point, the CS National Treasury then directed counties to establish county asset and liability verification committees. And each county government did a very comprehensive report. These reports were then submitted, I believe, to IBEC. Now, from IBEC, we don't seem to have closure on the issue of assets and liabilities of county governments. So perhaps it might be a different framework for national government, but for county governments, there's a serious concern. We have 47 reports. Some of these reports, when a new governor is elected, they come before this committee and they disown the report. And we tell them that this verification, there has to be closure. You have to draw a line in the sand and agree that these are our assets and agree that these are our liabilities. The governors have not done a good job, and every time they say that the matter is stuck in IBEC. So maybe from the Auditor General's perspective, do we expect a lot of disclaimers, adverse? And then to the CS, what is the status of the asset and liability reports that were submitted to IBEC? Starting with Patrick.
Thank you, Chairman. From our end, initially there was worry that we'll have issues with the opening balances because of the transition. But I can see the CS has really given guidance on how we proceed from the start, because you can see for the year ended 2025, they have requested that the entities prepare an opening statement of.
Are the counties really prepared for this? Because that will be the starting point. And if they are not prepared, the question Chair is asking is going to happen. So have you established that the counties are ready now to take off from what you have actually established? Thank you.
CS.
Chair, you'll allow me to begin from where you started, asking about the inordinate delay. And I want to address you by stating that when I'm sure you watched my vetting, and there's things that I committed myself to. One is this accrual basis of accounting. I also talked about zero-based budgeting. I talked about e-procurement, and I'm committed that we must deliver on this. So I found the government already had started or rolled out a program for this. So what I've done is to help it move further, and that is why it was one of the decisions that I took to roll out by gazetting the steering committee in August. On the issue before us, that you see, the auditors, whether we are expecting adverse reports in the first year, I don't think so, because one, the auditors audit based on policy of the government. We have decided to take advantage of the exemptions provided through the international standards, accounting standards, that we are rolling out this program in 3 years. So we started with the easier ones. Where there will be much complication is the fixed assets. Financial assets, usually, there is no much complication in terms of even valuing, because the values are there. So the financial assets are easy to determine their value. And financial liability. That is why in the first year, we have restricted ourselves only to having financial assets and financial liabilities. Then we move to the second year or second transition, where besides the financial assets and financial liabilities, we are bringing in inventories. And inventories also are easy to tabulate, because inventories are goods that are acquired or procured within the year. And they have not been utilized. So they remain as stock. If you are in business, they would be stock of trade or stock in trade. So that will be the. Now the final year, is where now we have to roll it out fully and bring in the elephant in the room, which is the fixed assets and long-term liabilities that would be difficult to quickly determine. And so the understanding here is that within this period up to 30th of June 2027, we are able to have a system where we are going to determine the value of all assets, both for national government and county government, the fixed assets. And you have asked a specific question, and that ties to what Senator Dulo has asked, whether county governments will be ready. We are preparing them to be ready to be able to determine and get these values. And again, you are right that there is the valuation committees, the asset valuation and liabilities valuation committees have been working on this. But we feel that time is enough for us to be able to determine. And by the way, counties should even find it easier to determine their fixed assets, unless the assets that were handed over by the national government, which will go through the same valuation process as national government assets. But counties acquiring new fixed assets, they should find it easier because at least these were not acquired long ago. Counties have not been in existence for far too long. National government would even be worse because if you go to even the government buildings, some of them were built in pre-colonial period. And so determining their value may be very complicated. But still, we feel that period is sufficient enough. Finally, Chair, on the issue of counties disputing and rejecting what others have done before, I think this is something that we must deal with because governments are in perpetuity. And the idea that you are elected today to take up an office does not render those who were in that office before you and the decisions that they took illegal as such. So we need just to respect that governments run and people, the various officers take up positions which others have been occupying, including the office that I today hold. Other 17 Kenyans since independence have occupied this office and they have made decisions. I must also respect those decisions within the law. Only decisions that are taken outside the law I would not follow. So I hope that addresses the question of the preparedness of counties. We are still preparing them, and we feel the time that we have between now and 30th of June 2027 is sufficient enough for us to be able to have this system now fully operational.
Okay, note the Director General Accounting Services is a project manager within the steering committee, and I hope there's a proper matrix for stakeholder engagement, because we didn't have to be the ones to call the CS for us to have this conversation. I don't know what the plan is. When did the steering committee plan to engage Parliament? Because already counties are reporting on this standard, and in the next couple of months we'll be receiving these reports. As per the original plan, what was the intention to engage Parliament?
Chair, I may just take note of that as a concern from the committee so that we fast track, but I'm aware that the plan was to have it this year. So what we may need to do is to front load, or rather bring forward the engagement with the parliamentary committees, especially the relevant ones, so that you can appreciate this system even as we start reporting on accrual basis. Actually, the first year will not be very complicated because it's just reporting on financial assets and financial liabilities, which are very easy to determine, and their values can easily be ascertained even in the market.
Yeah, you'll appreciate that over the years we have not been looking at the balance sheet in this committee. So it will be the first time the balance sheet will be presented. And so even in the private sector, whenever IFRS is updated, the boards, corporate boards are updated to anticipate the changes. This Public Accounts Committee is like the corporate board for government entities. So that engagement needs to be timely, and it does not need to be prompted by Parliament. I think if you've got a matrix for communication, please ensure that you implement it. We will request that the Clerk of the Senate and the Parliamentary Budget Office, which I can see has a seat in the steering committee, so that who represents PBO in the steering committee?
Chair, I'm not sure, but I think it's Director BBO.
Fine. So we can have an internal technical conversation with the project manager so that it prompts the next round of interaction with the CS. You can flag the issues that have been
I'm told it's called Joash Kusimba, the representative, you know him?
Yes.
The representative from PBO.
Fine. So we can have some in-house technical conversation and flag the concerns that exist, if any, and then that can prompt our next interaction.